Hi there guys, it's Luke Taylor here again from hopepropertyinvesting.com. How you doing? I just wanted to do a really brief video for you guys for the teaching series. This is one of the subjects that we'll talk about on our Hope Investor Nights, which we have. Just have a look at this stuff, guys. This is really going to help you in terms of knowing what sort of deals to buy and how to get the best growth in your portfolio in a fairly short space of time, fairly quickly. So basically, guys, we're going to do what's called combining strategies. So we're going to talk about 8 strategies where we can combine here today. So number 1, we want to look at buying under market value. So basically cheaper due to being unattractive, maybe a bank repossession or a fast sale because of divorce or a no reserve auction. So that's one thing, guys, to be able to buy under market so you've got some equity in the property from day one. Number 2, we want to buy at the lower end of the price range of the specific product. So that's basically so you're under less risk, so you've got less money in the market, less loans, less costs, all that sort of stuff. And also there's always going to be a need for lower end housing, and the lower end housing is generally what will move up in price as well if it's bought in the right area. Number 3, we're going to go buy positive cash flow. Make sure that it's going to cover its costs, minimum cover its costs, but ultimately you want to be able to add value so that it's actually going to give you some cash in your pocket as well. So that's number 3, guys. Number 4, we're looking for scarcity. So that's basically something that's sought after in the property. That may be, you know, close to the water. There's only so much water around Australia, so there's not going to be any more once that's built out and those properties are sold. That is obviously scarce because you can't buy it again. Obviously you want to make sure there's not a huge amount of development in that area, because that's going to help with your property price to keep going up, because there's higher demand when there's no other new properties available. Number 5, you want to buy at the bottom, as in the start of the market growth phase. So you want to buy just after the market started to turn and started to go up again. Okay, so that you know that you're going to get the growth. You don't want to buy in a market that's had a lot of years growth if it's starting to even out and the demand's getting lower, because you're not going to get your capital growth. And remember, that's the main reason we're investing, to get your bigger profits. Great, guys. And number 6, you want to add value. So on your property that you buy, you want to make sure there's an opportunity for you to make it worth more through adding value, to make it worth more through spending less than what it actually would normally cost someone to renovate or to add the value. So for example, you know, you might add a bedroom with one wall, which might cost you $2,500 from a builder. You know, you might do it yourself, it might cost $1,200, and that could add $20,000, $30,000, $40,000 worth of the value to the property straight away. Plus you're going to get $20, $30, sometimes $50 to $70 extra cash flow each week rent because of that one little change. So you want to make sure there's an opportunity to add some value, even if you're not good at renovating yourself, guys, okay? Because you can always get help with that stuff. It's not hard. Awesome. You want to then rent the property out at the increased rent. That's number 7, so that you're covering your costs, and also obviously you're getting more money to cover the mortgage. So that then number 8, you can then refinance the property fairly soon after the renovation, sometimes within 6 to 8 weeks after you've renovated the property. You can then pull that extra value, that extra equity that you've added to the property straight out, and then use that money to buy the next property, or you may sell the property if that's part of your strategy. But remember, with all the energy and effort that it takes to do the deals, guys, sometimes you're better off to keep going for the capital growth so you don't miss out on that extra value. Awesome. Another tip that I'll just share, guys, is sometimes it's really smart to repay some debt after you sell or refinance that property, so that you're not just borrowing. It's good for the human mindset too, to keep reducing your debt in your portfolio as you're still obviously increasing debt on new properties, but to reduce the debt on your existing portfolio, especially if they've got higher interest rates on those loans. So that's going to really help you keep going forward and keep getting more cash flow out of your existing portfolio while you also are building your future portfolio. Awesome. So repay some debts, guys. It's always a good thing to do. And next step is then you can repeat buy again, and that's how you can build a portfolio from scratch and quite quickly, if that's your goal to do, guys. Awesome. I hope this helps you guys. All the best. Take care.